Hi, I'm Jan Skoyles and this is Get Real, the only place you'll get the full story on precious metals, industrial metals, commodities, agriculture, water, bricks and mortar, all the stuff that is real. Today we're going to get real precious, and the most precious metals of all are gold and silver. With Christmas a short time away, it's difficult not to think of Melchior and giving our loved ones the most precious of gifts. But what about as investments? How merry are things really for gold and silver? Not very. Talk about unlucky number 13. 2013 is the first year in over a decade when both gold and silver will not be making annual gains. That's right, both metals are down by over 25%. Is 2013 the year gold and silver died? It certainly seems to be so, as analysts in the mainstream rush to be the first to conduct a post-mortem on the time-old investments. But hold up, 2014 isn't exactly ringing in a cured world economy. Will the new year bring with it a Sino-Japanese war? Deck taper. Is it really on the cards? Well, why not? After all, things are just so good in the US economy right now. The non-farm payroll data surprised us all last week. In fact, it's been priced in since May. That was until the emerging market nearly keeled over and the US bond market almost self-destructed. And China? Is China on the brink of its first corporate bond default? Are we about to see a partial debt crisis explode? Well, trade looks good. Last month it reported its biggest trade surplus in almost 5 years. But this, of course, included the second highest ever monthly import of gold from Hong Kong, 148 tonnes. Yet the price of gold went down. And Bitcoin. Welcome to Bitcoin derivatives, courtesy of Predictious. Bitcoin option spreads will enable both long and short positions to be constructed on the already extremely volatile asset. Bitcoin? Is that even a real asset? Well, helping us to explore this and more is Ben Davies, CEO of Hinde Capital, an alternative investment management firm based here in London. Ben, thank you for joining us and welcome to Get Real.
Thanks very much. Great. What a view.
I know. We're very lucky. I put it on especially for you. Let's talk about precious metals. As I was saying there at the beginning, at the start of the year, many expected gold prices to keep climbing, mainly based on central bank demand. This hasn't been the case. Two key events in April and June. Are we experiencing a correction, or do you think the party's just over for gold and silver investors?
No, it's over.
It's over?
No, really, it is over. Actually, it depends on who you're talking about. I think for the West, there's a sense of despondency. But look at where all the gold has gone, and perhaps that's something we should discuss. So,
because one of the things that's been linked to is the ETF outflows, and I want to talk about gold a bit later on. But first of all, let's look at silver, because they're both down significantly, gold and silver, but silver more so. And is this just because it's just a side participant in the gold price, or is it because we've got issues with industrial demand? Are there issues with the ETFs? I haven't heard there have been any outflows from ETFs. So what's happening with silver?
Well, I think that's quite significant. So the GLD, we've seen what I call the transhumance, the migration, a bit like the wildebeest across. Actually, where do they migrate across? But some Great Plain, which I can't remember right now. But a bit like the Buffalo coins, the ETFs are migrating over to China. So you've seen this collapse in the basket of shares out of the GLD. The custodian is HSBC. They have a very privileged access to the Shanghai Gold Exchange. There's probably over 40 tons of physical gold that is being redeemed into China through that exchange. So I think it's no coincidence, perhaps, that we're seeing the collapse in GLD. Alternatively, we can look at the SLV, and its custodian is JP Morgan. And obviously, they don't have that same relationship with China in terms of an exchange. And clearly, there is no demand for silver out of China to the same extent, and so there's no need to facilitate collapsing those share baskets and transferring. In fact, I would argue that, as you said, silver, the SLVs and the ETFs, they haven't contracted. Sprott hasn't contracted at all, really. That's really a testament to Eric Sprott and his integrity. And the SLV, I think you've seen the sort of largest quarter in uptake. And I'm not surprised at these prices. I think it's a way of making a speculative bet on the industrial rebirth, if you like, around the world as people perceive growth to be picking up, and also it's a very inexpensive bet on the monetary debasement that we're seeing currently.
So, but it's obviously being used as seen as an alternative to gold at the moment, particularly in India, where there's been all these controls on gold. You know, that silver demand in India, we were talking just before we started recording, and you came out with some phenomenal figures, and we've also seen this in coin demand. So it's not just an uptake on the industrial side of things, is it? It's people are seeing it as this alternative to gold, but also to savings.
Yeah, and you're right. It's a substitution effect. If you're being prohibited from purchasing a particular asset because of a price control such as import duty, and I would add that there's a lot of gold being smuggled into India through various routes, what do we call the gold road from Dubai. I've got a sort of funny anecdote in a minute about that. But yeah, so silver obviously doesn't have the same constraints in terms of import duties. So it's sort of poor man's gold, if you like, and people have been purchasing it accordingly. I have heard through various sources.
Oh, a bit of gossip.
Yeah,
right.
that smugglers have been asking for reshaping of ingots. Let's just say that it's a proctologist's dream, just so it's a bit smoother as to for ease of access into India. Let's just say that.
Oh, well, we make sure people keep out for these funny shaped gold
smugglers'
nuggets.
route, not just heroin up certain places.
Okay, well maybe that's for another show. Heroin is another real asset, perhaps. So, but back to silver. Why though are people? Maybe, yeah. Why are people turning to silver? Why are they still keeping their faith in silver ETFs? They're not in the silver futures market. It doesn't seem so much in physical silver here in the West. What is it about that silver ETF that's just keeping people's faith in that?
Well, I mean, comparatively, it's not particularly big in relation to probably the US gold ETFs that are out there. So I don't think it's necessarily about faith. It's just that we've already discussed it. There's been a lot of demand at these lower levels. And I think that people can hedge out through the COMEX. So, but I think it's just a smaller instrument, and so there's not necessarily it's who are the holders and where is the demand coming from. I think the big relationship of why the GLDs collapsed when perhaps other ETFs, gold ETFs, haven't come down as much, for instance.
Yeah, we'll talk about that.
Well, if you look at the other ones, they've only come down by sort of 22-25%, whereas the GLDs come down by 35-37%. So I really think it's just a size issue. I don't think there's this mass stampede needed to come out of SLV. And as I say, I think there's an industrial component.
And so when, GLD is the outflows from GLD, the gold ETF, is being blamed partially for the collapse in the gold price, the fall in the gold price. But silver's not seeing this. So why is silver still so low if ETFs are remaining high, physical demands, as we've talked about, is surging through India. The silver imports are still quite dramatic in China. Silver coins are up. What is it that silver needs? What's that catalyst going to be to propel it up? Is it what gold's looking for? Or are they now sort of quite separated in what's going to drive them further?
Look, in our parlance, we talk about a beta and in relationships of two assets, and silver trades at a higher volatility, or beta, it's a smaller market, it's got smaller denomination. Clearly the paper market trades extremes relative to that physical, which is when you have a supply glut, if you like, in the paper market, which is not necessarily representative of the physical market. Certainly that weighs on supply, and so until you see astronomical demand, you don't necessarily see prices revert to where they have. And you also have to remember, silver had a really great move up to $50, and that was probably on a par in terms of a mini NASDAQ bubble. And so in some ways, the correction is 56-60% off the highs. But even when we factor that in, and this is what I love, everyone's so doom and gloom about gold and silver, but what's the best performing asset class in terms of exchange-traded products since the Lehman Brothers collapse in 2008? Which are they? It's gold and silver.
Yeah,
Absolutely
our precious real
and
asset.
that is with a 34% correction in gold, which is comparable with 1974 and a couple of other instances in 1980, 1982. Silver, 50-60% off the highs, and yet they're still the lead assets. Fantastic.
Great. I think now would be a good time to turn to our gold and silver quiz. We've got some good questions on silver, and it'll link beautifully into gold. Okay. So are you ready?
Yeah, I'm nervous. You see me shuffling in my seat. Yeah.
You're pretty much guaranteed in this, because you're our first one to take this. You're going to be at the top and the bottom of our leaderboard.
Okay,
so you're guaranteed to win. So you're in the middle. Okay, so are you ready to take the real asset quiz?
Yeah, shaking.
Where was silver first mined?
Well, I want to say...
And you can have an extra point for when.
God. I want to say...
Begins with A?
Oh, I was going to say Turkey, but Anatolia.
Okay, yeah, there you go.
Okay,
well done. And when was it?
When it was first mined, 1000 BC.
3000 BC.
Oh,
that is way. In fact, I think you lose a point for being so far out, right?
No.
How much?
That was BC, not at least.
How much is Bitcoin divisible by?
100 million.
To 8 decimal places.
Yeah.
How many Bitcoins will ever be mined?
40.
Just 40?
Million.
21 million.
21 million. Oh no, that was silly. Yeah, I know that. 12 million have been mined so far.
That was the silly answer. Again, I think we're now on negative points.
2140 is the final date, isn't it?
Well done, yeah. In which country...
Do I get a point back?
You get a point back.
I meant 21.
I hope someone's listening to these points.
Yeah.
In which country is it most economic to mine gold? This is cash cost, not all-in cost. Most economic to mine gold.
Cash costs?
Yeah.
So yeah, I've got a big debate about. I know we've pushed time. North America.
North America is the answer.
That's what I said.
Yeah. So $598 per ounce it costs.
Yeah. Where's the most expensive?
North Africa, or just
West
Africa. Africa at $957 per ounce.
West Africa.
West Africa. Sorry, I apologise.
Labour costs are very high. I think that's probably the reason why.
Okay, you're not doing very well with the time here.
Okay, sorry, I've got time issue.
Which is the largest silver-producing country in the Eurozone?
Poland.
Well done. Do you know what their reserves are?
In Poland?
Yeah.
Their reserves?
Yeah, left to mine.
Left to mine?
Yeah.
Oh, billions.
85,000 tonnes according to this. But
yeah, so that's billions, yeah.
What is the biggest use for silver? Whether it's
industrial.
Jewellery? Well done, yes. When was silver first recorded as a currency, being used as a currency?
When was it first recorded? I don't know, Roman times.
700 BC.
Yeah.
Which country abandoned the silver standard? This is a good fact, actually, for lots of people just think we've always been on the gold standard.
I know this. I'm there.
Okay, which country? China abandoned.
They had huge hyperinflation in the late 30s, 40s.
They did. So yeah, in 1935, China abandoned the silver standard, for those of you that aren't as quick as or as knowledgeable as Ben. Which is more ductile, gold or silver? Have you not been reading all those World Gold Council reports? No, it's gold.
Gold, damn. I don't even know what ductile really means.
How many
I just trade it.
Which were the top 3 silver-producing countries last year?
Peru, Mexico, Poland.
No, Peru, Mexico and China, although I got it the wrong way around. It's Mexico, China and Peru.
China.
One last question.
Where's that?
Which former Fed chairman recently came out and criticised Bitcoin?
Former?
Yeah.
Greenspan.
Well done, yes. Time's up. That's not bad, actually, but I think I have to take away about 10 points. We'll count them up.
No, I didn't realise it was timed. I didn't listen, sorry.
I'm afraid you don't get a second chance, but well done anyway. Be sure to join us after the break when we'll be talking about gold, Bitcoin, and maybe a bit more silver. See you then. Hi, welcome back to Get Real. This week we're looking at precious metals, gold and silver. And with me I've got Ben Davies. Welcome back, Ben.
Hi there.
So in the last half we were looking at silver, so why don't we take a look now at gold and Bitcoin.
Okay.
So we briefly alluded to the gold ETF outflows that were going on, but you've brought some interesting graphs along with you, and the one I was particularly interested in is the one that's asking, has the bubble in gold really burst, and is it undervalued? So just what's your sort of outlook for gold at the moment?
You can clearly see that gold has not had anywhere near the same kind of trajectory on any duration as perhaps the NASDAQ bubble, even the recent silver rise, which was, in real terms, was actually hugely undervalued. To go back to 1980 levels, you probably have to get to sort of $400 per ounce for silver. So I think it was just to emphasise when people talk about gold and a bubble, it's pretty clear there's been no rate of exponential higher. In terms of undervaluation, I think it's a good way to look at it is sort of it's underowned. I would say that actual investable gold is probably only 0.5%, maybe a bit higher, especially actually probably back to 0.5% at these levels. If you think that asset-wide, there is probably global assets 220 trillion.
Okay.
Gold is probably 0.5% of that. So back in sort of the late 60s, around the time of the London gold pool, it was nearer 5%. So you can see that it doesn't take much increase in that number to see prices perhaps to go to a more relevant level.
Excuse me, and sorry, and
Sure.
this is just, the number's getting lower because what people want to see quicker, faster returns, or they, you know, why are fewer people investing in gold, do you think, at the moment?
I think there's been superlative performance in equity markets, although I would say that I wouldn't say it's euphoric, but certainly some of the valuations, particularly of small cap stocks all around the world, are comparable with the rate of increase again that we saw with the Nasdaq bubble. So although valuations aren't perhaps on multiples as high as some of those Nasdaq, in terms of actual price movement, they've been astronomical. So that's quite fascinating. So I think there's a tendency to feel the world's a little bit better. It's not going to collapse. The need to move into gold is the need isn't necessarily there right at this point. But you know, we've had the correction. It's a very standard correction. Perhaps the duration of the correction is a bit longer, 700 plus days instead of the average about 450. But I think this is a very healthy correction, and certainly the way governments are trying to solve issues around the world, it's just more of the same, more debt proliferation or changing of debt composition from private, public sector to corporate sector. So really, for my mind, this is, over the next few months, this is a great opportunity to rebalance portfolios. From a portfolio point of view, this is definitely a great time to buy. You talked about whether or not people need fast money. I think that's normally a speculative chase, but in terms of creating balance to a portfolio in terms of volatility, having 10%, 15% now would be very appropriate, in my opinion.
That's an interesting, that's a sort of, that was like the Swiss perspective, wasn't it, that you should take about 10% into your portfolio, a similar approach?
Well, I think you just rebalance. You know, a lot of people have been involved in equities probably a bit late. So if you have a 60% holding, I'd be looking to pare that back and rotate into other asset classes, of which gold could be one.
Which gold is one of them.
Yeah.
One of the sort of factors that attributed to gold's 12-year bull run that we've seen is the expansion in the US monetary base.
Yeah.
And one of the other graphs that you brought along shows, you know, this huge increase in the M1 money supply in the dollar, and the percentage of gold now backing it, which is quite low, but yet the price, you know, the gold price remains low. So it's, you know, that graph is something that's quite a bit of a favourite amongst gold bugs. Do you think that people are now not worried about, you know, the amount of money that's being pumped around not only the US but the world, and that's why sort of the gold price might be hovering down there? Well,
central banks have done an incredible job, really. They've managed to create what's called the portfolio channel effect, whereby you suppress yields, and you manipulate bond prices, QE, QE2, Operation Twist. It's not just in the US, it's in the UK. Japan began a reflation trade back in November. So they managed to keep bond yields so low that effectively people have been forced, because they'd have a capital loss if they were to maintain corporate sort of bond holdings at these levels, and including corporate bond yields. There's no protection for any kind of credit risk there at all. So people have been rotating into relatively inexpensive equities. You know, 2009 to 2013 today, we've seen that adjustment. And in that time, gold has come back a little bit after making all-time new highs in nominal terms. And so I think now is, as I say, this is the time to make that
flip back into it.
Yeah, absolutely.
And one area that we know full well is loving gold at the moment, and not so much the dollar, is China, of course. You know, China, well, I discussed in the beginning, you know, there's this sort of posturing perhaps going on between China and Japan. They're hoarding all of this gold, the imports that are going on, the mining. A, how much gold do you think China has? And B, what do you think their motives are behind grabbing all of this gold?
Well, the question is, are they grabbing all the gold? The import data would be suggestive that that is the case. Just to play devil's advocate, I think you can have a little pushback and say that obviously there's been some fake invoicing, particularly in the copper market, with regard to imports, just people trying to get money, companies trying to get money out of China.
That's interesting. I hadn't heard about that.
Yeah, into Hong Kong, and obviously there is some discussion that could also be going on with gold. Now, I think our firm's been very clear, and not to say, hey, I told you so, but we wrote about this back in 2008 in a piece called Auraphobia, the fear of gold, which was actually a reference to the West and their fear of gold, and saying that the real players to look at is China.
I mean, there's definitely a love trade going on there, isn't there, compared to here, which is just a kind of fear. You know, if we're scared of something, then we buy gold, whereas in China, it's just
yeah, maybe that's a very nice way of
yeah.
putting it. I think it's called the sensible trade.
Well, yeah.
Perhaps boring
But
trade.
Love is sensible.
Love is sensible. Ask my wife that. I think they work in decades, they work in centuries, maybe even millennia, if they can think that far forward. But they clearly are very forward-looking. They're going to have to liberalise the one. You know, the recent change in the Politburo, you can see that there is some actually even sort of Thatcherite reform coming through. I think there's a genuine desire to shift from this Bretton Woods to vendor financing relationship, where they really had an investment boom, and in return they've been funding the credit system of the US. They've tacitly come out and said that they're not going to be so reliant on this. This means that they're going to liberalise the one. Now, why will people want to ultimately support China where let's say there's been murky sort of shadow banking system? What better way than to provide some veracity is to back it to the gold? And there is no doubt, and in all my time travelling there over the last decade, this comes from the very highest level. Individuals are being encouraged to take on gold. So what perfect way, get them to purchase it. The state doesn't even have to purchase it to the same extent. All the mining that exists, all the mining of gold goes straight into the PBOC safe. So all the assets are staying on board, and they're importing more as well. You know, I think it's also interrelated with oil as well. You notice that contracts have been earmarked for one denomination.
Yeah.
Yeah, and I think this is significant. So what we're really saying is we're shifting away from the dollar reserve currency, and we're kind of reshaping the geopolitical landscape, and I think it's very significant. And I think it's in conjunction with Russia and also perhaps even the Middle East.
And the other area that China's been in the news quite a lot for, and other countries, including Germany, just to look back at recent news, is Bitcoin. As someone that is clearly a fan of gold and silver, which you acknowledge to be sound money, how do you feel about Bitcoin? Do you think it's competitor to gold and silver? Do you think it's complementary to them? How do you think precious metal investors should look at Bitcoin at the moment?
Yeah, I mean, having a real interest in the Austrian school of economics, I'm very Hayekian in my thought process, if I may say that, in the denationalisation of currencies. Who are the state to determine what currency that we use? After all, it's really a means.
I mean, Hayek is just all about competitive currencies, isn't he? Yeah, for those that aren't familiar with it.
Yeah, no, absolutely. So I think Bitcoin is phenomenal. I think it is. This is a real revolution. It's the future is now. I think for me, it's less about a currency or a store of value, although that may come in time. This is really about a payment system, and this decentralized peer-to-peer. Why has it not happened? Why have we not seen success in the digital revolution before? Obviously, we already have digital currencies, and fiat currency is done digitally. We had e-gold. Why didn't that work before? Well, it wasn't decentralized. There was. I was actually talking with John Matonis, the head of the Bitcoin Foundation.
Well worth looking up if people haven't before.
Absolutely.
Yeah,
He's been a fantastic advocate and is very cerebral on this topic. And it's very clear that something like e-gold had one point of failure, which is Bitcoin doesn't. I think Bitcoin, it's still really in its early inception. I'm very interested in the space for obvious reasons, and I think it doesn't replace gold in any. I think it's much more about a payment system. but it obviously is undervalued if you want to look at a currency like that at these levels.
Yeah, I mean, I agree. I think, it's something that can really pave the way, particularly for people like you and I that have been involved in gold and silver, for facilitating gold digital payments. I want to move on quickly now. We've had some great tweets and some Facebook questions when people heard that you were coming on the show. So kind of backtracking a wee bit from what we were talking about earlier on, when will physical demand drive paper gold prices higher? Any idea? What is the breaking point that we're looking for?
So I take that to mean that the concept of the fractional reserve banking for gold and
this is from TD Laverne. Thank you very much.
So the theory has been that the paper market, COMEX market, the OTC market trades at many multiples of the actual physical. Well, I think that when you ultimately suppress, and I would suggest that perhaps who benefits most from holding down the price? I'm going to answer your question. Holding down prices. Governments, because obviously it's the canary in the proverbial coal mine about debasement currency. It may well be, and I will suggest that it is of interest for someone like China or those who want to procure physical gold to hold it down as well. When does that give? At some point, and we need to look at delivery points on COMEX futures, there will be a point here soon where there's just not enough freely available gold. And I would say that 2014 is going to see a resumption of the market price higher, much higher than people think, and probably will catch most people unawares. They won't be on board the new bull market.
Well, you heard it here first, but make sure that you're not caught unawares next year in 2014, because that's going to be when gold and silver are going to take off. We've got time for one more quick question with one quick answer. And this is from, sorry, I haven't taken your name, but when will Hinde Capital consider a silver fund? And will it consider a silver fund?
We'll consider any alternative funds, maybe a Bitcoin trust.
Well, there you go, another exclusive for you. Hinde Capital may be considering a Bitcoin fund. Thank you very much, Ben, for joining us on Get Real.
Thank you. It's been fantastic. Really enjoyed it, and hopefully I get to come on again.
Well, we'd love you to.
I enjoy that. Great.
And thank you for joining us. Make sure you tune in next week for another episode of Get Real. They're both down significantly, gold and silver, but silver more so. And is this just because it's just a side participant in the gold price, or is it because we've got issues with industrial demand? Are there issues with the ETFs? I haven't heard there have been any outflows from ETFs. So what's happening with silver?
Well, I think that's quite significant. So the GLD, we've seen what I call the transhumance, the migration, a bit like the wildebeest across. Actually, where do they migrate across? But some Great Plain, which I can't remember right now. But a bit like the buffalo coins, the ETFs are migrating over to China. So you've seen this collapse in the basket of shares out of the GLD. The custodian is HSBC. They have a very privileged access to the Shanghai Gold Exchange. There's probably over 40 tons of physical gold that is being redeemed into China through that exchange. So I think it's no coincidence, perhaps, that we're seeing the collapse in GLD. Alternatively, we can look at the SLV, and its custodian is JP Morgan. And obviously they don't have that same relationship with China in terms of an exchange. And clearly there is no demand for silver out of China to the same extent, and so there's no need to facilitate collapsing those share baskets and transferring. In fact, I would argue that, as you said, silver, the SLVs and the ETFs, they haven't contracted. Sprott hasn't contracted at all, really. That's really a testament to Eric Sprott and his integrity. And the SLV, I think you've seen the sort of largest quarter in uptake. And I'm not surprised at these prices. I think it's a way of making a speculative bet on the industrial rebirth, if you like, around the world as people perceive growth to be picking up. And also it's a very inexpensive bet on the monetary debasement that we're seeing currently.
So, but it's obviously being used as an Hi, I'm Jan Skoyles, and this is Get Real, the only place you'll get the full story on precious metals, industrial metals, commodities, agriculture, water, bricks and mortar, all the stuff that is real. Today, we're going to get real precious, and the most precious metals of all are gold and silver. With Christmas a short time away, it's difficult not to think of Melchior and giving our loved ones the most precious of gifts. But what about as investments? How merry are things really for gold and silver? Not very. Talk about unlucky number 13. 2013 is the first year in over a decade when both gold and silver will not be making annual gains. That's right, both metals are down by over 25%. Is 2013 the year gold and silver died? It certainly seems to be so, as analysts in the mainstream rush to be the first to conduct a volatile asset. Bitcoin? Is that even a real asset? Well, helping us to explore this and more is Ben Davies, CEO of Hinde Capital, an alternative investment management firm based here in London. Ben, thank you for joining us and welcome to Get Real.
Thanks very much. Great. What a view.
I know. We're very lucky. I put it on especially for you. Let's talk about precious metals. As I was saying there at the beginning, at the start of the year, many expected gold prices to keep climbing, mainly based on central bank demand. This hasn't been the case. Two key events in April and June. Are we experiencing a correction, or do you think the party's just over for gold and silver investors?
No, it's over.
It's over?
No, really, it is. It is over. Actually, it depends on who you're talking about. I think for the West, there's a sense of despondency. But look at where all the gold has gone, and perhaps that's something we should discuss. So,
because one of the things that's been linked to is the ETF outflows, and I want to talk about gold a bit later on, but first of all, let's look at silver, because it's a post-mortem on the time-old investments. But hold up, 2014 isn't exactly ringing in a cured world economy. Will the new year bring with it a Sino-Japanese war? Deck taper. Is it really on the cards? Well, why not? After all, things are just so good in the US economy right now. The non-farm payroll data surprised us all last week. In fact, it's been priced in since May. That was until the emerging market nearly keeled over and the US bond market almost self-destructed. And China? Is China on the brink of its first corporate bond default? Are we about to see a partial debt crisis explode? Well, trade looks good. Last month it reported its biggest trade surplus in almost 5 years. But this, of course, included the second highest ever monthly import of gold from Hong Kong, 148 tonnes. Yet the price of gold went down. And Bitcoin. Welcome to Bitcoin derivatives, courtesy of Predictious. Bitcoin option spreads will enable both long and short positions to be constructed on the already extremely volatile